All right, so you want to dive into this whole Bitcoin thing, huh? Seems like everyone's freaking out about the crypto market like it's the end of the world, especially with Bitcoin dipping below 80 grand. You mentioned wanting to understand what's going on, and I think we got a pretty good lead here of the global economy.
Yeah, that's a good starting point. I mean, crypto has its own ups and downs, but it's definitely not separate from the rest of the financial world.
Mm-hmm.
And right now, things are pretty shaky out there. Lots of worries about inflation and, maybe even a recession coming up.
We found this Forbes article from March 13th, 2025. It's called BlackRock CEO Issues Serious Warning Amid $1 trillion Bitcoin and Crypto Price Sell-Off. And they're pointing fingers at some major players here. I
Yeah.
mean, we're talking the CEO of BlackRock plus economists from places like Goldman Sachs and your Denny Research.
Yeah, BlackRock is kind of a big deal. They manage more assets than anyone else in the world. So when their CEO, Larry Fink, starts talking about inflation being a major problem, people listen up, especially when he's tying it to all this stuff about rising nationalism and trade wars, which are pretty hot topics these days.
No, the article says Fink is worried these policies could actually make inflation worse. And that could really mess things up for the Federal Reserve. They were planning to cut interest rates to help the economy grow, but now they're in a tough spot.
Yeah, it's a tricky situation. If the Fed cuts rates too fast, it could actually make inflation even worse. It's like pouring gasoline on a fire you're trying to put out.
So what do they do?
Well, if we don't do enough to stimulate the economy, we could be headed straight for a recession.
And just to add to the drama, Goldman Sachs and your Denny Research are saying there's a good chance the U.S. could go into recession within the next year. That's a pretty big deal. What are they so worried about?
They're not happy with some of the economic policies that are in place right now. Things like executive orders firings and tariffs. They think all that's creating instability and making investors and businesses nervous.
So this isn't just a crypto problem then.
No, not at all. When people start thinking a recession might be coming, they tend to get really cautious with their money, especially when it comes to investments. They pull back from anything risky and move their money into safer things, like government bonds or just holding onto cash. And guess what? Crypto, especially Bitcoin, is often seen as one of those risky investments.
Yeah, I can see why the possibility of a recession would make people think twice about putting money into something as volatile as Bitcoin. But what does a recession actually mean for the average person? Like, what would that look like?
It can have a real impact. We're talking job losses,
Sure.
businesses closing down, and the whole economy slowing down. It could be a really difficult time for a lot of people.
Okay, so we've got this backdrop of economic uncertainty with inflation and recession fears looming over everything. Sounds like the perfect recipe for a crypto sell-off. But then the article throws us a curveball. It says that U.S. inflation actually slowed down a bit in February, hitting 2.8%. So is that good news or bad news?
It's kind of confusing, right? On the one hand, lower inflation is generally a good thing. It means prices aren't going up as quickly, which gives some relief to people and businesses. But there's a catch. People are still worried about those trade policies we talked about and whether they might push inflation back up in the long run.
The article quotes an economist at BIT Mining named Yue Yang. He says that even though lower inflation should be good for crypto, it hasn't reacted strongly due to lingering fears. Sounds like the market's holding its breath, waiting to see what happens next.
Yeah, that's a good way to put it. The market is definitely on edge, looking for any sign about whether inflation is really under control or if this is just temporary.
So we've got a lot going on here. A potential recession, worries about inflation, and the Fed trying to walk this tightrope of managing the economy. It seems like everyone's waiting for either the White House or the Fed to give them some clear direction before they make any big moves.
Definitely. And all that uncertainty is making the market super volatile, especially for stuff like Bitcoin, which is known for its crazy price swings.
This is getting complex, but before we go too deep into all the details, let's step back for a second and think about what all of this means for our listeners.
Good point. It's easy to get lost in the technical stuff, but what does it actually mean for someone who has money in Bitcoin or someone who's thinking about investing in crypto?
Yeah, that's what we're here to figure out. What are the key takeaways for our listeners?
I think the main takeaway is that crypto and Bitcoin in particular aren't in some little bubble. They're affected by the same economic forces that shape the rest of the financial markets. And right now, those forces are causing a lot of uncertainty, volatility.
So if you're already invested in Bitcoin, it's important to stay updated on what's happening in the broader economy and to be prepared for the possibility of more price swings. And if you're thinking about investing in crypto, Do your research, understand the risks, and don't invest more than you can afford to lose.
Exactly. And don't freak out and make any rash decisions based on fear or because everyone else is doing it. Take your time, be patient, and make informed choices that align with your financial goals.
All right, so we've set the stage for our deep dive into Bitcoin. We've got a volatile crypto market, a nervous global economy, and a whole lot of uncertainty hanging in the air. So, where do we go from here?
Well, now that we have a grasp on the economics of it all, I think it's time to explore the psychology of the market. Because, let's be real, emotions play a huge role in how people invest, especially in something as unpredictable as crypto.
Ooh, I love a good psychological thriller. Let's get inside the minds of crypto investors and see what's driving their decisions in part two.
So yeah, we were talking about how psychology plays a big role in the crypto market. It's really interesting how fear and greed can get mixed up with something as technical as Bitcoin.
It's like a financial soap opera. You've got all these big economic forces at work, but then you also have the human element, the hopes and fears, and even rumors that can make the market go crazy.
That's exactly it. The market is made up of people, and people are driven by emotions. And sometimes those emotions can lead to decisions that don't really make sense, especially when you're dealing with something as volatile as crypto.
Okay, so let's say you're an investor and you're seeing the price of Bitcoin drop and everyone's talking about inflation and a possible recession. What kind of emotions would you be feeling?
Well, fear is probably the biggest one. Fear of losing money, fear of missing out on potential profits, even fear of the unknown. And when fear takes over, it can lead to panic selling, which can make the price drop even more.
It's like a self-fulfilling prophecy. People get scared, they sell the price drops, and then even more people get scared.
Exactly. And on the other side, when the market is doing well, greed can take over. People see the price of Bitcoin going up like crazy, and they don't want to miss out. That's what we call FOMO, the fear of missing out.
Ah, good old FOMO. That's not just a crypto thing, it's a human thing. But it seems like FOMO is especially powerful in the crypto world. Maybe because everything happens so fast and there's this idea that you can get rich overnight.
You're right. The speed and the potential for huge profits in the crypto market can create a really intense emotional environment. And that can make it even harder for investors to make rational decisions.
So it's almost like investing in crypto is a psychological test.
Mhm.
Can you stay calm when everyone around you is either super excited or totally freaking out?
It's a great way to put it. To be successful with crypto investing, you need to understand the technology and the market, but you also need to be able to control your emotions.
I'm starting to understand why people say that psychology is just as important as the fundamentals when it comes to investing. But how does all this psychology stuff play out in the current economic situation, with all this uncertainty we're facing?
Like we discussed before, there's a lot of anxiety right now about inflation and the possibility of a recession. And all this uncertainty creates the perfect conditions for fear and doubt to spread. And as those emotions spread, they can lead to investors pulling out of riskier assets like crypto.
So even if the economic news isn't all bad, the market can still react negatively if investors are feeling scared.
Exactly. Sentiment is a big deal in the market. If investors are feeling optimistic about the future, they're more likely to take risks and invest in things like Bitcoin. But if they're feeling pessimistic, they'll usually move their money to safer places.
That makes sense. When you're worried about losing your job or your retirement savings, the last thing you want to do is gamble on something as unpredictable as crypto. But how can you tell what the overall market sentiment is? Are there any signs to look for?
There are definitely some things you can watch for. One is media coverage. If you're seeing a lot of negative headlines about the economy or about crypto specifically, that could mean that sentiment is turning negative.
So if everyone's talking about Bitcoin crashing, it might be a good idea to wait before buying more.
Yeah, it might be smart to be cautious, at least until things start looking up.
Yeah.
You also want to keep an eye on trading volume. If the amount of Bitcoin being traded is going down, it could be a sign that investors are losing interest or becoming more risk averse.
Like the tide going out, everyone's heading for higher ground. What about social media? I feel like that's where a lot of the hype and FOMO around crypto comes from.
Social media is definitely a powerful force in the crypto world. It can amplify both positive and negative sentiment. If you're seeing a lot of doom and gloom predictions or panicked selling on Twitter, it's probably a sign that fear is gripping the market.
So it's not just about the numbers, it's about the stories people are telling themselves about those numbers. If everyone believes that Bitcoin is going to fail, it almost becomes a self-fulfilling prophecy.
That's the power of narrative. And in a way, the crypto market is especially vulnerable to narratives because it's still so new, and there's a lot of uncertainty about what the future holds.
I guess that makes sense. When something is new and unproven, people are more likely to rely on stories and emotions to try to understand it.
Exactly. And that's why it's so important to be aware of these psychological forces that are at play in the market. It's not just about understanding the technology or the economics, it's about understanding human behavior.
It's like we're not just talking about Bitcoin anymore, but about the psychology of money and investing in general.
You got it. And I think these insights can be applied to any type of investing, not just crypto. Whether you're buying stocks, bonds, real estate, or even collectibles, understanding how emotions can affect your decisions is super important for success.
So, what's the takeaway for our listener? How can they use this knowledge about market psychology to their advantage?
I think the most important thing is to be aware of your own emotional biases. When you're making investment decisions, ask yourself, am I being driven by fear or greed? Am I letting FOMO cloud my judgment?
It's like taking a step back and looking at your own thoughts and feelings from the outside.
Exactly. And if you realize that your emotions are taking over, it might be a good time to pause, take a deep breath, and think about your decision again.
It's like that old saying, don't make important decisions when you're angry or upset. It applies to investing too.
Absolutely. Another helpful tip is to focus on the long term. The crypto market is incredibly volatile in the short term, but if you believe in the underlying technology and the long-term potential of crypto, you're less likely to get stressed out by daily price changes.
That makes sense. If you're constantly checking the price of Bitcoin and reacting emotionally to every little up and down, you're going to have a really stressful time.
Exactly. It's like watching a stock ticker all day long. It's not healthy, and it's not going to help you make good investment decisions.
Okay, so we've talked about the economic situation and the psychology of the market. What's the next thing we need to consider to understand the future of Bitcoin?
Well, I think the next step is to look at institutional adoption. We touched
Yeah.
on this earlier, but I think it's worth taking a closer look at how companies and institutions are using Bitcoin and what that means for its future.
You're right. We talked about companies like Tesla Square and PayPal getting involved with crypto, but is that just a trend or is it a sign that Bitcoin is becoming mainstream?
That's the million-dollar question, isn't it? Let's explore that in part 3.
Okay, so we're back for the final act of our Bitcoin saga. We've talked about the economic landscape and the psychology of the market, and now it's time to zoom in on the big players, the institutions.
Yeah, it's like the grand finale where we see how all these different pieces come together and what they mean for the future of Bitcoin.
Exactly. We've got these major companies like Tesla Square, PayPal, even BlackRock itself dipping their toes into the crypto waters. Is this a sign that crypto is finally going mainstream, or is it just a fad?
Well, that's the question, isn't it? I think to understand what's going on, it's helpful to think about why these big companies would be interested in Bitcoin in the first place.
All right, so put on your professor hat for a minute and explain it to us like we're five. Why would a company like Tesla decide to buy Bitcoin?
Well, one reason might be that they see it as a way to protect themselves from inflation. Remember how we talked about how traditional currencies can lose value over time because of inflation? Well, Bitcoin has a fixed supply, which means in theory it can't be affected by inflation in the same way.
So it's like a digital gold rush. Companies are buying Bitcoin to protect their money from losing value.
That's one way to think about it. And it's not just about protecting the money they already have. Some companies might see Bitcoin as a way to grow their assets, like a strategic investment in a new and exciting market.
That makes sense. If you're a company with a lot of cash on hand and you're looking for ways to invest it, Bitcoin might start to look pretty attractive, especially if you believe it's going to be worth a lot more in the future.
Right. And there's also the technology side of things to consider. Bitcoin is built on something called blockchain technology, which has a lot of potential uses beyond just cryptocurrency.
Yeah. I've heard about blockchain being used for all sorts of things, like tracking products and supply chains, or even for voting systems. So companies might be investing in Bitcoin not just because they think it will be valuable as a currency, but also because of this blockchain technology.
Exactly. They might believe that blockchain is going to revolutionize lots of different industries and that getting involved with Bitcoin early on will give them an advantage over their competitors.
So it's not just about the money, it's about the potential for this technology to change things up and create new opportunities. But what does this mean for the average person? Should we all be running out to buy Bitcoin just because Elon Musk is doing it?
Not necessarily. It's important to remember that institutional adoption has its pros and cons. On the one hand, it brings legitimacy and stability to the crypto market. When these big players invest in Bitcoin, it shows that they see value in it and that they're willing to put their money where their mouth is.
But on the other hand, it also means that Bitcoin is now influenced by the decisions of these large institutions. If they decide to sell their Bitcoin, it could cause the price to drop significantly.
That's definitely something to keep in mind. We've already seen how a single tweet from Elon Musk can send the price of Bitcoin up or down. So it's important to be aware of this influence and not get swept up in the hype.
So institutional adoption is kind of a mixed bag. It can bring stability and legitimacy, but it also creates new risks and uncertainties. What else do we need to think about when we're trying to predict the future of Bitcoin?
We can't forget about regulations. Governments all over the world are still trying to figure out how to deal with cryptocurrencies, and the rules they put in place could have a huge impact on the market.
Right. We've seen some countries like El Salvador actually make Bitcoin an official currency, but other countries have been much more cautious. Or they've even banned cryptocurrencies altogether.
Exactly. And this uncertainty about regulations makes it really challenging for businesses and investors who are involved with crypto. It's hard to make long-term plans when you don't know what the rules are going to be.
It's like trying to build a house on sand. You never know when the foundation is going to collapse.
I like that analogy. And this regulatory uncertainty is one of the biggest obstacles that Bitcoin and the whole crypto market need to overcome if they want to be accepted by the mainstream.
So we've got these huge companies investing in Bitcoin, but we've also got governments trying to figure out how to control it. Sounds like a bit of a power struggle. Who do you think is going to win in the end?
That's tough to say. I think the most likely outcome is that we'll see a gradual shift toward a more balanced approach to regulation. Governments will probably find ways to regulate crypto without preventing innovation, and businesses will adapt to these new rules.
Like finding a compromise, a middle ground where both sides can work together.
Exactly. And I think that's what needs to happen for Bitcoin and crypto to reach their full potential. It's not about one side winning or losing. It's about finding a way to integrate this new technology into our current financial system in a safe and responsible way.
So as we wrap up our deep dive into Bitcoin, what are the most important things for our listener to remember?
Well, I think the key takeaway is that Bitcoin is at a crossroads. It's facing both challenges and opportunities, and nobody knows for sure what the future holds. But one thing's for certain, Bitcoin is here to stay. It's already changed the financial world in a big way, and it's only going to become more influential as time goes on.
It's like a wild horse that's been partly tamed, but could still throw you off at any moment.
I love that. And that's what makes Bitcoin so exciting. It's a powerful force, and it's going to be really interesting to see how it develops over the next few years.
Well, I think we've given our listeners a lot to think about. We've covered the economics, the psychology, the big players, and the regulations. What more could they ask for?
I think we've covered it all. But as always, I encourage our listeners to keep learning and exploring. The world of Bitcoin is constantly changing, and there's always something new to discover.
Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep your eye on that wild horse, Bitcoin.